In this episode, we will simplify ASC 842, the new lease accounting standard. ASC 842 is a replacement for the previous lease accounting standard, ASC 840. It requires all leases to be recorded on the balance sheet, regardless of whether they are classified as operating or capital leases. The FASB changed the lease accounting standard to improve transparency and comparability of financial statements. By requiring all leases to be recorded on the balance sheet, investors will have a better understanding of a company's financial position and its obligations. ASC 842 will affect companies in a number of ways. First, it will increase the amount of debt that companies must disclose on their balance sheets. Second, it will make it more difficult for companies to hide liabilities by leasing assets instead of buying them. Third, it will make it more difficult for companies to manipulate their earnings by leasing assets instead of buying them. The key differences between ASC 842 and ASC 840 are, under ASC 842, all leases must be recorded on the balance sheet, regardless of whether they are classified as operating or capital leases. Under ASC 842, the lease liability is measured at the present value of the lease payments. Under ASC 842, the right-of-use asset is amortized over the lease term. Here's an example of how ASC 842 would be applied to a company that leases an asset. Assumptions. The company leases a building for 10 years. The lease payments are $100,000 per year. The interest rate implicit in the lease is 5%. The company's incremental borrowing rate is 6%. At the beginning of the lease, the company would record this journal entry. Debit, right of use. Asset, $1 million. Credit, lease liability, $1 million. The right-of-use asset is the present value of the lease payments. The lease liability is the amount that the company owes to the lessor. At the end of each year, the company would record the following journal entry. Debit, lease liability, $100,000. Debit, interest expense, $5,000. Credit, cash, $105,000. The lease liability is reduced by the amount of the lease payment. Interest expense is recorded on the amount of the lease liability outstanding. The balance sheet would show the right-of-use asset and the lease liability. The right-of-use asset would be classified as an asset, and the lease liability would be classified as a liability. The income statement would show interest expense. Interest expense would be classified as an operating expense.